Hello, everyone, and welcome to another session of our information literacy series. This time, we're going to cover financial literacy. So the learning objectives for today are first defining and understanding the importance of financial literacy. Then we're going to go over the different types of bank accounts and an overview of payment types. And then we're going to demonstrate how and where to find financial information and financial literacy resources. And these are going to pertain to a variety of things, including investments, check writing, bank accounts, etc. So first, we're going to start with the concept of financial literacy. And you may not have heard of this term before, but according to the U.S. Financial Literacy and Education Commission, it is the skills, knowledge, and tools that equip people to make individual financial decisions and actions to attain their goals. And we highlighted the three kind of main things in the definition here in different colors. So first we have skills, we have knowledge, and tools. So skills is what you get from knowledge, and then the tools allow you to use those skills and knowledge. And putting those things together allow you to make individual decisions that help you attain your goals. So basically, applying knowledge and skills equals financial capability. So financial literacy is important because it's a part of everyday life. You know, every time you go to the store and purchase something, there is going to be a degree of financial literacy involved. It also creates healthy spending and money habits at the current moment, and creating these healthy habits now can really help set you up well for the future. And even those who are strong in reading and writing may actually struggle with financial literacy. And there are many reasons for this. One being maybe they never had to worry about finances before maybe going to college or moving out. And any of these reasons listed here may pertain to you. And if they do, that is okay. It's nothing to be ashamed about, but it is a learning process. Another reason is that decision making can be difficult when money is involved. Maybe you're afraid of making the wrong decision, and if you make the wrong decision, money can be lost, and that's never a good thing in most people's situations. And if you're unaware of what your options are, that can actually hinder your financial literacy skills. So there's a lot of things that can get in the way of financial literacy. So it's important to identify those things and then work to improve them. So other things that can get in the way of financial literacy, in many cases, it's not taught as a core skill in many schools. I know in a lot of people's experiences when this session was held live that a lot of people did not learn basic finance when they were in school. They didn't learn how to write checks or learn about bank accounts or mortgages or anything that is kind of a core life skill when it comes to finance. And that can really be problematic because you let these students pass these other classes and they learn all of these other great skills, but then they don't have the basic fundamental skills to be financially literate. People also may have a lack of trust in financial services and resources, and that can be a common thing, especially with the older generation, depending on how they grew up. Financial affairs may also be taken care of by people they care about or other people. And so people may not have financial literacy skills because they never have to really worry about it. If someone else takes care of their own financial affairs, they don't need to think about, oh, maybe I shouldn't go to the store and buy this candy bar that I don't need or something like that. Some people have a lack of awareness or they have a lack of time to learn financial literacy skills. Some also may have anxiety towards finances, and a lot of this can be due to the lack of education. So that kind of circles back to the not being taught as a core skill in school. And so it's kind of a vicious cycle where if you're not taught in school, you can have anxiety or lack of awareness or even time to learn because once you graduate from high school or graduate from college, you might have a full-time job and don't have the time or energy to learn these basic financial literacy skills. So how can you improve this? There's a couple different ways. So first, increase your financial education and awareness so you can decrease the unknown. And to do this, you can make sure that you're aware of all of the different financial resources that are available to you. And then you also want to encourage the use of online financial resources and services. There's a lot of things that can be done online now compared to, 30, 40 years ago, where basically all financial affairs had to be taken care of in person. You can meet with financial advisors on Zoom now, you can talk to them on the phone. Um, you don't have to necessarily meet face to face. And a lot of banking services are also online now, and you don't even have to visit an actual physical bank. So it's a very nice thing with the increased use of technology. And so these types of things, while there are financial scams and things out there, online or digital resources and services can also do some good. So here are some questions to kind of ask yourself on a personal level. So think about where you get your financial information. I have some general categories listed here, but you can get them from any number of these or none of these. But think about where you get your information from. Do you get them from social media, finance influencers or finance YouTube channels or Instagram accounts that are primarily about finance or, saving money or thrifting or things like that. Th- Finance influencers on social media can take a lot of different forms. They may not consider themselves a finance influencer, but you can kind of group together any kind of social media person that talks about anything related to saving money or anything related to that, kind of anything money related. You could almost say that they're some kind of finance, influencer on social media. And so you really want to think about, why do these finance influencers say these things? Is this information going to help you or is it helping them? Does it help both of you? And if it helps both of you, that's great. But why should you trust this information? A lot of people on social media, they maybe not share all of the information, or they will share things that may not apply to you, and therefore the information is not useful. It can also be very misleading. A lot of people tend to get their financial information from friends and family. I know I do that, and I think a lot of other people do too. If someone has never filed their taxes, they probably will ask their parents because their parents probably have filed taxes for years. So that's a common example. But you want to make sure they're getting their information from a reliable source as well. Financial advisors are also a great source of financial information. They can help you achieve your financial goals, but you do want to make sure that the advisor is right for you and has your best interests in mind. You can also get a lot of information online through banking and investment websites and government websites. But remember that not all sources are created equal. So thinking about all of these together, why should you trust these sources? And are they looking out for your best interests? Um, Really, that last question is what you want to focus on because when money's involved, the best interests can really make a difference. So just keep that in mind when you're getting financial information from any location or any resource. So some questions to ask yourself when it comes to making financial decisions and retrieving information. Make sure the source is trustworthy. Does the source, website, or individual have the proper credentials? And does it apply to your financial situation? So first you want to check to make sure that the resource has the proper credentials. Does the website have some kind of, seal of approval by a government agency? Is the website a government agency website? Make sure it's an actual reputable website, not savelotsofmoney.com or something more commercial like that. And that can get a little skewed there. So you do want to make sure that the information is coming from the right source If it's an individual, maybe see if they have some kind of degree in finance and make sure their experience matches what they're saying they have experience in. And then secondly, make sure the information applies to your financial situation. Every person's going to have a very different financial situation and different financial goals. So that's going to determine what kind of information you need and the resources that you need. The second question is, do you understand the financial terms in the information? So if you have little to no financial background, there can be some terminology that can be confusing or difficult to understand. And if that's the case, there's nothing wrong with doing just a quick Google search or looking up what that word is. There's nothing wrong with that, and it'll help you understand the information better. And then lastly, what do you do with the information? So once you get that clear understanding of the terminology and the information, think about your own financial goals and see if those things match up based on what you need and make the decision that's right for you. If you really aren't sure where to start to become financially literate, you can also just create a budget, and that's a great place to start because everybody needs to budget. There is a cash flow worksheet located on our library Canvas page, and you can print that out and you can kind of fill it out and put all of the amounts of how much you spend on different things like, rent, food, groceries, medicine, all those little things. And it'll kind of show you, how much money you're actually spending on different things. It's a great place to start and can be a real eye opener. So, how do you use this information to make informed decisions? Some things to remember are that everyone's financial situation is different, resulting in different paths. So, not everyone's financial journey is going to be the same. Some people, unfortunately, come from different socioeconomic backgrounds, so everyone's going to be a little different in terms of the path that they take. Think about what your biggest expenses are. So, are you paying for college tuition? Do you have a car payment that you're making? Are you renting a place that is taking up a good chunk of your paycheck? Think about your biggest expenses, and maybe you have to prioritize those first, but it just depends on what your goals are. So, with that in mind, think about what your financial goals are. Are they to invest some money that you're saving? Are you saving for retirement? Are you just trying to spend less money? Are you trying to just make ends meet? There's so many different goals you could have, and you can have more than one. You don't have to necessarily have one goal. It's okay to have multiple, and that can also be a very good way to really plan well for the future. Think about others as well. Do others depend on you for financial support? If they do, that will really factor in to your financial goals and your situation. So the ultimate goal is to really just make the best decision for you and your financial well-being. Your financial well-being will probably be different than someone else's financial well-being. So you don't want to be quick to judge someone else based on their financial situation. They may be doing very, very well for themselves, based on their background and their goals, even if you think that, that is not necessarily the best thing for you. So really just focus on what you need and what you consider to be financial well-being. So I'm going to cover real quick the different types of bank accounts. Now, I'm not going to go through every single bullet point here, but these are just things to watch out for and think about when thinking about what types of bank accounts you may want to open. If you don't have a bank account already, it might be a good idea to maybe open one at some point, just to have a place to set money aside. But first, we have a savings account, which is a basic deposit account for setting money aside, meaning you don't need it immediately, and it pays monthly interest on funds. And so basically, you put money into an account at a financial institution. Since they're holding the money for you, they pay you a percentage in monthly interest. Usually, it's not a lot, but it is a little bit of something. There may also be small service fees or minimum balance requirements. If you don't know what a balance is the amount of money in an account. But the nice thing about savings accounts is that the money can be withdrawn at any time. Checking accounts are similar to savings accounts, that they're a deposit account that can be opened at a physical or online bank or at a credit union. They hold funds that can be used to pay bills and can be used for direct deposit purposes for payroll if you work a job. A lot of companies actually require checking accounts for direct deposit now, so that would be something to consider if you are looking to open a bank account somewhere. Checking accounts typically come with a debit card that can be used to make purchases and paper checks. And so if you need to write checks to people as gifts or to pay for things, that is a useful thing. And a debit card can be used for purchases. There's also different types that exist. So there's a lot of student checking accounts, senior, child, or interest ones. Depending on the bank, some banks will have benefits for college students. If they open a checking account there, they might waive the minimum balance fees or waive the fees for maintaining the account every month or something like that. So it's good to shop around to different banks to see what gives you the best kind of deal in a way. You do want to watch out for ATM or maintenance fees for when you withdraw money from an ATM. Overdraft and return check fees if you do write a check from a checking account and there's not enough money to cover the check, and minimum balance requirements. Again, it's good to shop around and really look at the rules and regulations for having an account at a bank before opening one, because you don't want to open one up and then not realize that you didn't have a minimum balance, or they take out, 20 bucks a month for maintenance, a maintenance fee, and you didn't catch that at first, and you'd rather go somewhere else. So just watch out for those. There's also money market accounts, which aren't as common, but they combine the features of checking and savings accounts, but are limited to 6 withdrawals per month. But it's a good place to store money short term for easy withdrawals. A lot of times they're used by businesses, so this may not apply to you, but those also may have minimum balance requirements and low interest rates. Next, we have certificates of deposit, or a CD for short. So CDs are timed deposit accounts where funds are deposited for a set period of time in exchange for interest, and you will usually get a higher percentage of interest compared to a savings account. So there's more incentive there. Once the time period is over, it's called the maturity day, and you can withdraw the funds or roll over. That's another one of the banking terminologies. You can roll over the money for another time period. So to kind of give you an example, if I have $100 and I open up a certificate of deposit with $100 and the interest rate is 1%, that would actually be quite high, I think, for a lot of CDs nowadays. But if the interest is 1% for the time period that it is deposited for, and let's say the deposit period is 6 months. So when I put that $100 in for 6 months, I'm not supposed to touch that money or withdraw it. And if I do, I would get a penalty for withdrawing it early. But if that money stays in there for the entire 6 months, by the end of it, I would get the 1% interest. So I'd have, I believe, $101 in there. And then I can either take the funds out when it hits that maturity date, or if there is another certificate of deposit rate that is maybe a longer period of time or a shorter period of time with a better interest rate, I can roll over the money to have that set in there for another set time period to get that interest rate. So hopefully that kind of makes sense, but that's kind of how a CD works. You may have heard the concept of an IRA. It stands for Individual Retirement Account, and there are kind of 3 types that exist. There's the traditional IRA, which is where money is put in and it is deductible on your taxes for the year. And then when you take the money out when you're retired, that is when you pay taxes on the funds. And then a Roth IRA is kind of the opposite. where when you put the money in, it is money that you've already paid taxes on. And then when you withdraw the money when you retire, you don't have to pay taxes on the money because you already paid it once when the money went in. There are also 401ks and 403bs, which are retirement accounts that are set up by your employer. It is often a benefit that most employers offer their employees, and the employer typically matches your contributions. So it's part of most employee benefit packages. So it's always a good idea to consider contributing to those if your employer matches your contributions. So that's kind of an overview of bank accounts. There are other bank accounts out there, but I wanted to cover kind of the most common ones that you will encounter and ones that you most likely will have at some point in your life. So if you're an international student or have any international finances, there are some things you do want to watch out for, such as foreign currency exchange rates. A lot of times the rates will change over time, and so you don't want to lose out on money if the currency exchange rates are really drastic. Watch out for wire transfers and other means of exchange for tuition payment. Wire transfers can get very tricky if all of the information does not match. So when you're filling out a wire transfer form or something like that, just be very careful that all of the information is correct because that can cause a lot of headaches down the line. Wire transfers also have, usually they have like a fee that goes along with doing the transfer. And if you've never heard of a wire transfer, it's basically kind of it's taking money from one account and kind of transferring it to another or making a payment, but it's usually done internationally. And it's usually done for large amounts of money that can't be taken out as cash or something like that. You may want to also watch out for credit and debit card purchases that can charge sometimes hidden fees or international charges. I know some people, when they study abroad for college, they can actually get a special debit card that will allow them to use their checking account to make purchases overseas, and then they won't get charged a fee. So that can be something to look into if you are international. But if you do use a regular credit or debit card overseas, there can be hidden fees with those. And sometimes banks will typically they'll either try to hide them or try to not tell you right up front because they want people to not know and then get hit with the fee. So unfortunately that can happen. So just make sure you're looking out for yourself. If you are accessing cash from a foreign bank, some ATMs don't allow that or they will charge fees unless you have a very specific card. I know in the United States, a lot of debit cards, you can go to other ATMs at banks, even if it's not the bank account that it belongs to. And you can still take money out, but they will usually charge a fee. So kind of same rule applies. So just be wary of that. Some banks are international and some are local. So some banks like Chase Bank, they have branches all over the United States. And then some banks are maybe only local to the state or only local to the city. And so if you are looking at different banks and you're wondering which banks you should use, that is something to consider. And if some banks don't do international transactions and you're not you don't live in the United States or you have international financial affairs that you need to do, that's something to consider. And then different bank accounts may only be allowed in certain countries or locations due to US regulations. So definitely be conscious of that and make sure to look, do your research before selecting a bank to open an account at. So here's a list of the different types of payments that you might encounter. There are probably some others not listed here, but most of these are the ones that are going to be the most common. So there's cash, of course. Cash is the most primary form of payment. There's credit card, which lets you make purchases now, and then you pay for it later when it's due. If you don't pay it on time, there is interest usually tacked on, so kind of an extra fee. So if you easily forget to make your credit card payments, that can sometimes really hurt with financial literacy because some people don't realize that. There's also a debit card, which is basically a card that acts as cash. and funds are immediately withdrawn from the connected checking account when you make a purchase with a debit card. So when I have a debit card, I think of it as it's immediately connected to my checking account, and if I make a purchase, the money comes out right away. There are personal checks, which are written out by the account holder to a recipient, and funds are withdrawn when the recipient cashes the check. You may have gotten these from family members as gifts for graduating high school, or maybe even from a friend to help pay for something. So that I know a lot of people use Venmo or some kind of mobile payment, which is another option on here actually. But um, personal checks are still a thing, so it's a good idea to still remember that you can still cash those in. Money orders and cashier's checks are checks issued by a bank or financial institution, and they're usually used for large purchases. I know I used a cashier's check to put the payment in for my car because that was one of the only few types of payments that the car dealership would accept. And so that might be an example of when you might have to use a money order or cashier's check. And if you do need to get one of those, you can usually go into a bank branch and go to one of the teller windows and let them know that you need a money order or cashier's check. And you can either have the money withdrawn from your account to make the check, or you can bring in cash or some kind of other form of funds to create the check. Now, not every bank will do this for people that don't have accounts there. So you want to make sure that they just check their rules on their website to see if they would allow people to make checks if they don't have an account there. My recommendation would be to, if you have a bank account somewhere and they offer money orders and cashier's checks, just do it at that bank, just because you won't have to deal with maybe extra fees for not having an account there. There are also mobile payments like Venmo and things like that. Those are electronic payments made via a bank mobile app or a third-party app. So those are also very useful for making payments long distance for people that don't necessarily live close proximity. There's also direct deposit, ACH transfer, and electronic funds transfers. And these are when funds are electronically deposited into an account. And this is most common for when people get paid on payday and also for tax refunds. So this is kind of a list of the most common payment types you'll encounter, but there's probably a couple others that you'll encounter that may not be on this list. So I have a diagram here if you have not written a check before. So this is kind of a little chart on what needs to go where on a check. And so this is also on our Canvas page if you do want to look at this at a later time. If you do need to write a check, this is how the information will be written on the check. So your name will go here. The date goes usually on the date line. This is the check number. You don't need to fill that in. That will already be filled in for you. This is where the name of the recipient goes. This is the dollar amount in numeric format. Number 3 is the check amount written out in words. So you have to write out, the whole number word by word, not by digits. Number 5 is a memo. You don't have to put anything there for it if you don't want to, but it helps to put something there so you remember what the payment was for. And then if you're writing the check to somebody, you have to sign your name here, and that will verify the check so that the person that you gave it to can then cash it. I will also say, typically, if you receive a check, a paper check from somebody, remember to sign the back of it. There's usually a line for it on the back if you plan on cashing it at a bank. If you're doing a mobile deposit, which is honestly, I think, more common now than going to a physical bank to cash a check, usually instead of signing your name, you have to write something along the lines of for mobile deposit at bank X only or something like that, and then you can then deposit it into your account through the bank's mobile app. So kind of going backwards a little bit to going back to financial literacy, just some final financial literacy tips. First, beware of financial scams. They are everywhere. They are in phone calls, they're in text messages, they're in phishing emails, they're literally everywhere. And it usually only takes one person for the scammer to get their money's worth in terms of how many of these phone calls or text messages that they send out. So if someone calls asking for your bank information, or you get a weird email or a text asking for bank account information, saying you won $500,000 or something, it's probably a scam. So most banks will not be asking you for bank information. So, don't give it to anybody, even if it looks legit. Just always be very protective of your banking information and your financial information. This also applies to any personal information like usernames and passwords for your financial accounts, your social security number, your tax form information, anything like that. You want to make sure you keep that really safe because you don't want to fall victim to a scam. It's a good idea to check a financial institution's policies and fees before opening an account. Those are usually available on their website. This was a personal opinion for me, but I recommend people using the auto pay feature to pay bills online so you don't miss a due date. So I personally like using the auto pay feature on all of my bills just because it automatically deducts what is due from my bank account on the due date. So I don't have to worry about missing a due date. I just have to, log into the account every so often and make sure that the amount looks correct, or, they're not overcharging me or something weird happens in the system with a bug or something. But that personally works for me. If that doesn't work for you, there's other ways to make sure that you don't miss a due date on bills. But autopay is usually a very common feature that most people offer to pay bills. You just want to watch out for overdrafts. You don't want the bills to basically outrun the money in your account. So if you're having the autopay feature on and you're not really paying attention, you can sometimes get an overdraft. So be careful of that. Take advantage of any financial benefits your employer has. That includes, facilities, 401k, matching, all that stuff. And when I mean facilities, I'm thinking like things that the employer offers as a benefit that might cost money otherwise. So like a common example is going to a fitness center or a gym. Usually you have to pay a gym membership in order to be able to use fitness equipment at a gym. If your employer has a fitness facility or a fitness center that is free for employees to use, try to use that instead of going to a gym, because then that'll save you money on your gym membership. Make sure to create and follow a budget. Remember that you can't spend money that you don't have. And the last tip is to really start learning how to do these adult things early. So those are things like filing taxes, paying bills, getting used to paying bills on your own, paying down debt, opening bank accounts and IRAs. There's a lot of things to do, those adult finance type things, but it's okay to ask for help and it's okay to not know right away what to do. Some things do take some trial and error, and some things get better and get easier with more experience. From my personal experience, I worked at a bank for 4 years, a couple years in college, and then for a couple years in my graduate career when I was in graduate school. And when I worked at it was a bank in Cleveland, and I learned a lot about bank accounts and bank policies. And it was a lot of stuff that I had no idea about, or I didn't really know much about all of those things before working there. And so my experience there, as I got older, really helped me learn a lot about finance and being able to do those adult things when it comes to financial literacy. So that's just kind of one example. So, there might be ways in which your life experiences will help you improve your financial literacy, even if they're not the most conventional ways. So, kind of to wrap things up, there are some links to some financial literacy resources on this screen. They're also listed all on Canvas. But we've got the IRS website. There's some tools for improving financial health and literacy with calculators and budgeting worksheets and checklists. There's the Federal Deposit Insurance Corporation, which stands for FDIC. They have information on deposit accounts that are insured by the FDIC, which falls on most banks fall under that category. And then there's also the Consumer Financial Protection Bureau, which has information and tools to help you plan for large financial goals. There's also a couple of investment resources on Canvas. I won't go through all of these, but these are on Canvas on our modules. So feel free to check those out at your leisure if you're interested in investments. And then these were just the references used to assist with making the presentation. So I really hope that you learned something about financial literacy skills and the definition of financial literacy. I hope that you can at least take something useful from this session. Feel free to check out our Canvas page for these tools, and feel free to reach out to Shafer Library if you have any questions about any information on this session that are on these slides. So thanks for listening, and we'll see you guys for the next session.